Hello guys, so this is a quick review on the trade I had during the London session on GBPUSD. Obviously I started my analysis on the daily time frame or the weekly time frame. So obviously on the daily time frame you can see price breaking um, market structure to the downside. You can see price created this bullish order block, price came into it, it went up, fail to take this swing high. Price at today's opening obviously was right here. Now let me quickly go on the 3 hour time frame. So when I came on this chart, basically what I was looking for is if the market is giving me reasons to buy or to sell. On the 3 hour time frame, we see this imbalance right here on the 3 hour time frame, and if we measure this imbalance, as you can see, price was not able to come lower to fill this imbalance, not fully, because we didn't even come below. If I put back the 50% level, did we touch it? Almost, but we didn't really touch the 50% level, even though I prefer the price touching at least 60%, 62%. So according to my trading model, I suggested that this gap right here was not filled. So I looked for more confirmations to see if price was going lower. And then when I turn to the 3 hour time frame, I'm now on the 3 hour time frame. We see this bearish order block right here. By the time I was looking at this chart, price was at this level. Now this candle went up into this order block right here, and we have sell side liquidity, buy side liquidity, buy side liquidity. And now when I went to 1 hour time frame, H1, this is the same order block. On the 3 hour, I highlighted this order block. I turned to the 1 hour time frame. All right. Um, this candle, this bearish candle right here, this is where it opened, and this is where London session started. It opened right here, and we see Asian session came right here, and it touched the order block that I showed us on the 3 hour time frame. And in that process of touching the order block, price took out this high. Let me zoom in so they can see. It took out this high on 1 hour time frame. I switched to M15. This is the same high that price basically it shoot up with so much momentum. It touched the order block and then went lower and it closed below. So to me, price going above these highs, I regard that as liquidity grab. So when I switch to M5, price came right here. I watched it. I wanted to see if I could see more confirmations to go lower. And I switched to M1. and I still have my annotations right here. So price took out liquidity above this high, above this high, above this high. That tells me that smart money is no longer willing to go higher because the buy side liquidity has been taken out. So now what I'm looking for is price to break any bearish structure, which happened right here. I show us price created relatively equal lows right here, and price created this short-term high, this right here, and then we broke this one, and the second one price closed below, then went back up to where this move started from, where the move that broke these lows started from, right here. And if I use my fib from the high to the low, as I mentioned in my previous videos, I don't take anything that is below 50% level. That is according to my rules. If it doesn't fit in to your trading plan, please do trade according to your rules, whichever works for you. So when price came into above 62, above 70, here at 79, I entered my sell right here. The reason is, if you see this spike up here that took out all the highs that I showed us, basically price is telling you that the smart money is not willing to go higher anymore. Okay, so as basically the name of my models says, algo footprint concept, that means we search for, I basically search for the footprint or a sign that the algo is at work. The algo has taken liquidity. How do I know it? When I see liquidity grab, then I know this is smart money doing this, and all I wait is a sign to go higher or lower, and I just follow. So this to me, I beg your pardon. This to me is the footprint. I know you could be saying, no, that's not a footprint because according to um, other concepts, you need to follow some sort of a software. Yeah, that's just another concept. But anyways, you just concentrate on whatever works for you. Whatever works for you, follow it. So this right here, if you could just identify where uh, liquidity has been grabbed, either the buy side or the sell side, you have higher chances of winning your trades. Okay, because no retail is able to do this. Look at this candle. How many pips is this candle? From here, this is 30 pips on 1 minute time frame. No retail is able to do this on one candlestick. That is the footprint of the algo. And if it has grabbed the buy side liquidity, why would you think that smart money is going to continue buying this market? No way. You're taking it lower. So I entered my sell here. Now for the target, I switched back to H1. Why H1? Because that is where I was able to identify. By the way, I also forgot to show us that we had also a gap right here from this candle. This candle, that is a gap that the algo had to fill. And the target is the sell side liquidity or another mitigation area. So the sell side was this relative equal loss right here, which happens to be the low of the previous day right here, and price has to fill all this imbalance. It has to be filled in all this. Now I highlighted this. I posted on my Instagram and on my Twitter. When I was in this trade, I was still holding my position. By then, price was right here, right here, and I said I don't know if I said it, but anyway, this horizontal line was here, and I just posted now on my social media accounts. Price touched it and rejected. So what has happened here? I beg your pardon. This gap has been filled. This bullish order broke because this imbalance was as a result of the news we had. Um, was it the CPI? It has to be CPI, and this order broke has been mitigated. So what is the next scenario for this pair? I don't know. This is weekend. Today is Friday. We have to wait until next week because the algo, there's price action, price delivery for the week, okay? And then the new starting week, price is going to behave differently. And I mean, like basically, the only way to know the bias for the week is the liquidity and the imbalance or the gap. Has price taken out, for instance, this week, price has taken out this sell side liquidity. This is the previous week's low. It has been taken out. So my question is, why would smart money be interested taking the price lower, you know, lower, if they had taken out all this liquidity? You see? So that's how you lead the footprint of the algo. It's there in the market, guys. Let me show you something else. Let me show you something else. You see how I did the footprint of the algo? So easy. Price takes out this buy side. All right. Buy side liquidity is taken. Price comes lower. What do you think is happening here? What do you think? I beg your pardon. This is not so neat. Let me make another one. What do you think has taken place here? People were buying, chasing the market. And when the algo brought price below, look how energetic these candles are. Look how energetic they are. All right. When price was brought lower, like this, and then we had a pushback, or rather a pullback. Why was it that the smart money did not take this price higher back to this level? Look, almost same level. Why is that? Because they cannot give chance these people to close their profits, to close their positions either in profit or at break even. No chance is given to these people. It comes to the same level with this high that was taken out, and then price is taken down. So this, I mean, it's so easy. It's so easy. Look at this. Sell side is taken. This was news above these highs. What do you think happened here? Breakout traders chasing the market. No chance was given. Entry is not supposed to be above here because the smart money is driving the market, inducing buyers here, but their intention is to take down the market. Look how energetic this was. News, by the way, and I took this. My entry was here on 1 minute time frame. So easy. So how do I identify the footprint of the algo? Liquidity. ICT talks about this on, I mean, every video he has posted on YouTube, he talks about this stuff. The problem is people are so lazy to watch 1 hour video, 2 hour videos. They are not interested. And one guy said to me, ICT talks too much and he doesn't show a lot of stuff. I was like, you're crazy. Because ICT doesn't teach a strategy. I have said this to many guys who have approached me. ICT does not teach a strategy. ICT unveils, reveals the how smart money operates, how the algorithm in this industry operates. He unveils this stuff, and it's up to you to listen to him and then come up with a model that suits your personality. And that's why even when ICT goes on Twitter just talking and he's not showing anything, I'm always there listening because he reveals so much in his words. I'm done, guys. I'm done on this video. So take care and um, keep practicing. All right. Have a fantastic week.